Hello students, today I would like to welcome you all to this video. In this video we are going to learn about the ledger accounts. So let's start. So ledger accounts are the accounts in which we record the double entries. So you can say the accounts of each transaction. We are going to make some accounts. So let's have a definition of ledger. So what is a ledger? Actually, the ledger is a book in which we make accounts. The accounts that we make, we also name them T accounts. Why we say this T accounts? Because it does look like a T while we are making the format. So there are three types of books of ledgers that we make. The first one, we make sales ledger. In the sales ledger is the book in which we make only customer's account, means we only make the accounts of trade receivables, the persons that we suppose to receive the money from. The second ledger that we are going to make is purchase ledger. That's the second book that we make. In this book we make only supplier's account. That means the accounts of trade payables, the companies or the persons we purchase the goods from. The next ledger, the book of T account that we make, is called nominal ledger. We also name this as general ledger. In this ledger we make all the others T accounts, means all other accounts that we need we make in this book of ledger, nominal ledger. So if we are going to make an account of sales account, so we are not going to make sales account in sales ledger. We will make sales account in nominal ledger. So the sales account, purchases account, sales return account, purchase return, capital, drawings, all these accounts we are going to make here, except the customer's accounts and the supplier's account. All the other accounts we are going to maintain here. Now let's have a look on the format of an account. So the format of an account, as we know that we also called an account is a T account. So why we say it's a T account? Because its format does look like a T to us. Let me use the scale. So it is like this. So it means we have a line here and we have a line here. It does look like a big T. So over here we are going to name the account, like the title of the account. Let's suppose that I'm going to make the bank account. So that's the title of the account. So the side from this line, the left side that we have, we call the debit side, in which we record the debit entries. So the side that we have on the right side we called credit side. So means we are going to record all the credit transactions here. We also have some columns here. So we have 3 columns on each side. Let me make these columns for you, then I will explain to you about each column. So the first column that we have here, we record date into this column. The second column that we have, we record the details. In the third column we are going to record the amount, which means the amount and details and date of the debit side. So now on the credit side, the same columns we are going to make date, details and amount. Now let's have a look how we are going to record our transaction into this T account. So let me write down a transaction here and then I will tell you how we are going to post this into this bank account. So we know that the first transaction that every business has is a capital transaction. So let me record that with the bank debit, because the amount invested in the business bank account. So we debit the bank account and we credit the capital account. That's the first transaction. Let's suppose the amount that we deposited is $50,000 and the date was 1st of January, for example. So once we are done with this double entry, so we are going to post this entry into this bank account. So how do we do that? So the bank account that we know, it's debiting into this double entry, and what we are going to do, we will go to the bank account and we will select the debit side, because our bank account is on a debit side. So we'll select the debit side and we'll write down the date, 1st of January, and we'll write down the amount that we are debited with, 50,000, and in the details column we are going to write down the amount that is the reason of being debit. So the reason why the bank account is debiting, because of the capital account. So the capital account, the account that is crediting here, will write down the name of that account. This is how we post a transaction into a T account. Let me give you another example of a transaction. So I'm going to post that transaction again here. Let's suppose we bought some furniture and we paid by check. So we are going to debit the furniture account because our asset is increasing, and we are going to credit the bank account because our bank asset is going to be decreases. So the amount was 10,000. So the date was 3rd of January. So now the bank account is going to be credited. So what do we have to do? We have to go to the bank account and we have to select the credit side, and we'll write down the date first, the 3rd of January, and write down the amount on the credit side, 10,000, and now here in the details, the reason of why the bank account is crediting is because the furniture is debiting. So write down furniture account here. Now similarly, we are going to make capital account as well, and we are going to make furniture account as well. So we'll record in the capital account on the credit side, and in the detail column we will write down the bank account. And same thing, what do we do in the furniture account? We will debit the furniture account, and in the details column we'll write down the reason, the bank account. So let me show you another entry. Let's suppose that we purchase some goods on 4th of January. So we'll debit the purchases account, and we paid by check, so we are going to credit the bank account, and the amount was 5,000. So another entry that I'm going to write down here, on 5th of January we got check, so we'll debit the bank account because that we make some sales, so sales account is going to be credited. So the amount was, let's suppose, 6,000. So now here I have these two more transactions, so I'm going to post these transactions into the bank account. So now the first entry that I have, like purchases one, so now in this transaction we have bank is on a credit side. So we have a bank on a credit side, so I will go to the bank account and I will select the credit side, and I will write down the amount 5,000, and I will write down the date 4th of January. Now the reason is because the purchases account. Similarly, the last transaction that I have here, in this transaction I have bank account is going to be debited with the 6,000, and it is because of the sales. So on 5th of January, 5th of January, I will go to the debit side, I will write down here 5th of January, and I will write down the amount 6,000, and the reason is sales account. So this is how we make a bank account. So let me make the total of this account, how to balance a T account. To balance a T account, we have some easy steps. So first of all, what do we have to do? We have to look into the both sides, and we have to see which side has a bigger value. So in this scenario, the debit side has 56,000 and credit side has only 15,000. So which means 56,000 is the bigger amount, so we'll make the total of 56,000, and we will transfer this to other side. Now we are going to deduct this 15,000 from this 56,000, so that's end up in 41,000. So 56,000 minus 10,000 and then minus 5,000 will give me the balance of 41,000. So I will mention this with balance carried down. Carried down mean it is the closing balance that we are going to carry from this period, and we are going to transfer it to the next period. So the next period we are going to write down this balance as balance brought down. So brought down, which means that this balance we brought it down from the previous period. So the same account will come up down here. It is similarly that if we have a closing bank balance of 41,000, so obviously in the very next day it will be our opening balance with the same amount. So here this closing balance and this opening balance, the date will come up. Let's suppose if we are going to close this account after a week. So the week end on 7th of January. So the closing date of the week will come up here, and the next day, very next day of the week, that will come up here. Let's suppose the 8th of January. So this is how we balance a T account. So if we have a bank account balance on our debit side, which means that it is our asset, because assets always comes up on a debit side, so as expenses. But the liabilities, capital and income, it comes up on a credit side. So it has a debit balance, which means that we have $41,000 in our business bank account. Thank you.